The global economy is a complex web of interconnected systems, with energy prices, the US dollar, and interest rates acting as its fundamental pillars. These three factors, intertwined and interdependent, exert a powerful influence on international trade, investment flows, and overall economic growth. Understanding their dynamics is crucial for deciphering the currents of the global market and anticipating future trends. Energy prices, often volatile and subject to geopolitical shocks, ripple through the global economy. They directly impact production costs, transportation expenses, and ultimately, the prices of goods and services. The US dollar, as the world's reserve currency, plays a pivotal role in international transactions, influencing exchange rates, trade balances, and capital flows. Lastly, interest rates set by central banks, particularly the US Federal Reserve, steer borrowing costs, investment decisions, and overall economic activity on a global scale. These three elements form a delicate balance, and any significant shift in one inevitably triggers adjustments in the others. For instance, rising energy prices can fuel inflation, prompting central banks to raise interest rates, which in turn can strengthen the dollar. This intricate interplay highlights the interconnected nature of the global economy, where seemingly isolated events can have far-reaching consequences. The global economy has long grappled with the spectre of deflation, a period of falling prices that can stifle economic growth and lead to a downward spiral. However, recent years have witnessed a marked shift towards an inflationary environment, characterized by rising prices and eroding purchasing power. This transition, largely driven by policy decisions, has significant implications for businesses, consumers, and policymakers alike. The pivot from deflation to inflation can be attributed in part to the unprecedented fiscal and monetary stimulus unleashed in response to the economic fallout of recent global crises. Governments around the world injected trillions of dollars into their economies, while central banks slashed interest rates to near zero and embarked on massive bond buying programs. These measures, while necessary to avert a deeper recession, have also fueled inflationary pressures. The surge in demand, coupled with supply chain disruptions and rising commodity prices, has pushed prices upward. This inflationary environment presents a unique set of challenges, prompting central banks to tighten monetary policy and governments to grapple with the political and social consequences of rising costs. The transition from deflation to inflation underscores the significant role of policy in shaping economic outcomes and highlights the delicate balance policymakers must strike between stimulating growth and managing inflation. The United States, long the dominant force in the global economy, stands at a crossroads, facing challenges to its economic and geopolitical hegemony. While its military might remains unmatched, its economic prowess is increasingly being questioned as other nations, particularly China, rise in prominence. The US has long leveraged its economic and military power to shape the global order, promoting free trade, securing access to resources, and projecting its influence on the world stage. However, this approach has also drawn criticism, with some arguing that it has led to global imbalances, fueled inequality, and fostered resentment towards the US. As the global economy undergoes a period of rapid transformation, the US faces crucial decisions about its role in the world. Will it continue to pursue a unilateral approach, asserting its dominance through economic and military might, or will it embrace a more collaborative model, working with other nations to address shared challenges? China's remarkable economic ascent over the past few decades has reshaped the global landscape, challenging the long-standing dominance of the United States. Central to China's rise has been its strategic focus on industrial development, transforming itself from a low-cost manufacturing hub into a global leader in technology, innovation, and infrastructure. China's industrial strategy has been characterized by a combination of state-led investment, targeted industrial policies, and a relentless pursuit of technological advancement. The country has made massive investments in education, research and development, and infrastructure, creating a fertile ground for innovation and economic growth. Moreover, China has actively sought to move up the value chain, transitioning from producing low-cost goods to developing advanced technologies and high-value-added products. This strategic shift has enabled China to become a major player in sectors like renewable energy, artificial intelligence, and telecommunications, challenging the technological dominance of the West. Section 520-24 and beyond. US elections and the global economic order. The upcoming US elections in 2024 hold significant implications for the global economic order, with potential policy shifts capable of sending ripples across the global market. The outcome of the election could determine the trajectory of US trade policy, its stance on globalization, and its approach to international economic cooperation. A change in administration could usher in a period of uncertainty and volatility in the global economy as businesses and investors adjust to new policy directions. Trade tensions already simmering in recent years could escalate, impacting global trade flows and investment decisions. Furthermore, the US's approach to climate change, a pressing global challenge, is likely to be influenced by the outcome of the election. The chosen policy path will have far-reaching consequences for global efforts to combat climate change and transition to a more sustainable future. Section 6. The geopolitics of de-industrialization and financialization. The global economy is undergoing a profound structural transformation, marked by the decline of manufacturing in developed economies and the rise of finance as a dominant economic force. This process of de-industrialization and financialization has significant geopolitical implications, reshaping global power dynamics and creating new sources of economic vulnerability. As developed economies have shifted away from manufacturing, they have become increasingly reliant on finance, with financial activities accounting for a growing share of economic output and employment. This has led to the concentration of wealth and power in the hands of a small financial elite, exacerbating inequality and potentially undermining social cohesion. Moreover, the rise of finance has been accompanied by a surge in cross-border capital flows, making economies more interconnected and vulnerable to financial shocks. The 2008 financial crisis served as a stark reminder of the systemic risks associated with a highly financialized global economy. Section 7. A tale of two economies, diverging paths, uncertain futures. The United States and China, the world's two largest economies, stand in stark contrast, pursuing divergent economic models with uncertain consequences for the global economic order. The US, a mature capitalist economy, has increasingly embraced financialization, while China has pursued a state-led model emphasizing industrial development and technological advancement. These diverging paths have led to growing economic and geopolitical tensions between the two superpowers, with each accusing the other of unfair trade practices, currency manipulation, and intellectual property theft. The trade war initiated under the previous US administration highlighted these tensions, disrupting global supply chains and raising prices for consumers and businesses. The future of the global economy hinges in part on the ability of the US and China to find common ground and manage their economic rivalry. A cooperative approach focused on addressing shared challenges like climate change and global inequality would benefit both countries and the world at large. Section 8. Navigating Uncertainty, Global Economic Outlook. The global economy is navigating a period of heightened uncertainty, grappling with multiple challenges, including persistent inflation, geopolitical instability, and the ongoing COVID-19 pandemic. The confluence of these factors has clouded the economic outlook, making it difficult to predict future trends with certainty. Central banks around the world are facing the delicate task of taming inflation without triggering a recession. Rising interest rates, while necessary to curb inflation, could dampen economic growth and potentially lead to job losses. Furthermore, the war in Ukraine has disrupted global energy markets, fueling inflation and raising concerns about energy security. Despite these challenges, there are also reasons for cautious optimism. Technological advancements, particularly in areas like renewable energy and artificial intelligence, hold the potential to drive economic growth and create new opportunities. Moreover, increased international cooperation, particularly in areas like climate change and pandemic preparedness, could help mitigate global risks and foster a more stable and prosperous future.